Hello and welcome back to a new episode. In this episode, we want to learn how to catch every move in the market using market structure shift, especially when we are talking about catching the moves in the market in the lower time frame. And that's why I titled this very lesson, Lower Time Frame Market Structure Shift Entry. This is very important because there are times price comes into an area of interest and then gives a choke, and from the origin of the move to that choke is huge. For instance, you could have something like 80 pips, 100 pips, 100 and something pips. Are you going to be sitting on your hands until price moves 100 pips to take out choke and then gives you inducement before you take your trade? In my opinion, I think that is unacceptable. So you need to find a way of how you can take advantage of market structure shift to enter your trade in the lower time frame and ride it down to that level of choke. So that is why I'm making this video, and I want you to pay attention. Now, let me take you to the chart and actually show you what I mean. Now, take a look at this. This is GU, GBP USD, and this is 1H. This area of interest is from the daily time frame. And now, price came into this higher time frame area of interest. You know that as soon as price comes into this higher time frame area of interest, you need to look for choke. And that's why we mark this point as choke. Why is this a choke? Well, as you can see, this is a high here. Price took out inducement to confirm this high. And then this is a low when it went ahead to break this major structure high and close above it. So if price takes out this level, that will become our change of character. And then we need to wait for inducement before we can take our trade lower. Okay? I'm talking about in the event that this is the last point that price will go into in this higher time frame area of interest. Now, from this origin here to this change of character level here is about 105 pips. That's huge. Now, ask yourself, are you going to sit on your hands waiting for price to move 105 pips before you can take a position in the market? Think about it, guys. I mean, it doesn't make sense. It does not actually add up. So how are you going to take advantage of this market coming down on the lower time frame to take price to this level of choke? How are you going to do that? And secondly, how are you sure that this is going to be the last high before price will rotate back down to take out this choke? How are you sure that price will not continue to do something like this? How are you sure? And take out this previous high and continue going higher? How are you sure that it's not going to happen? How are you sure it's not going to happen? Ask yourself that question. Okay? Now, the way to know this is going to be by any of the two ways I want to show to you right now. Now, number one way is this. If at this point you find something like this, you find a candle pattern like this, price going higher, and then the next candle closed below this previous candle's low, then on your lower time frame, that is likely to be a market structure shift from there. Because you need a market structure shift. You want to see a shift, first of all, on this 1H time frame. Remember, we are coming from the daily time frame. This is the zone of the daily time frame. And then we come to this 1 hour, and price has entered into the daily higher time frame area of interest. This is our choke. But how do you know that price will not go deeper? Look at this zone. It's large. So price can continue to go deeper before coming back down. How do you know that? Now, how you know it is with this candle pattern here. Okay? This candle pattern. once you find this candle pattern here, then you know that is most likely to be the last point where price will travel into this box, into this area of interest. Now, the number 2 way is price comes into this higher time frame area of interest, the way it is, and then you want to see your 1, 2, 3 pattern. Look at this. You want to see 1, 2, 3 pattern to confirm that there is a shift here on the 1H time frame. You must confirm that shift of structure first. So once you see this 1, 2, 3 pattern, you know that price is about to rotate back down to come and take out this chalk here. Okay? So you now know that this is the last point that price will travel into this higher time frame area of interest. I hope you understand what I'm trying to say. Once you find any of these two, then you can now scale down to 5M to begin to take price lower to this change of character level here. Now, as you can see, this pattern did not happen here. Price actually took out the previous candle's high, but it didn't close below. But the second pattern happened here. Look at it. Let me show that to you. Now, you know, if price is going to go higher, this is what you are expected to see. When price taps here, comes down, you are expected to see something like this that will go higher to take out this high. Then you will know price is continuing to go higher. But that is not the case here. Look at what happened here. Price came down to this point and moved higher to go up to take out this previous candle's high. And then price came down to close below this level, as you can see. Look at what happened there. Okay? This is 1, 2, 3 pattern coming down, not going up. This is what we have here. 1, 2, 3 pattern. This is a market structure shift. So once you see any of these two, in this case, you saw this one here, then you will know that price is likely. It is not 100% guarantee, but at least you can be fairly sure that price is most likely to start traveling back down to come and take out this chalk here. And therefore, on your 5M, you want to take advantage of it. And when we get to the 5M, I'm going to show you what you should be looking for with this market structure shift on the 1H. I hope you understand that. So this is the 5M. Now, remember that on the 1H time frame, we had already established that market has shifted structure. So on the 5M, what you want to wait for is for price to take out chalk. Okay? And here is that chalk now. Price has taken out chalk there. So what do you want to see here after price has taken out chalk? This is what you want to see. Now, take note. Price is coming into our higher time frame area of interest. The higher time frame area of interest. And then price comes down to take out this chalk here. Okay? After taking out that chalk, what do you want to see? You want to see inducement. All right? Now, if price takes out this inducement and gives us TNCP, then we can go short from there. But otherwise, if it closes above and gets to any valid area of interest, then you can take price lower. And you will continue that process, taking out inducement, tap on any OB, and then you go lower. To where? To the H1 change of character. Okay? Simple. That's what you want to be doing on this 5M. And therefore, with this in mind, okay, let's begin now to plot the market. Now, after this change of character, it printed this low. And where is your inducement here? Because you need inducement. Now, inducement is here. But as you can see, that inducement was not taken out. And before you know it, it printed a new low. For this low to be confirmed, now you need, for this low, it needs inducement. Okay? Remember that we are trying to go short from here. Where is the inducement? Inducement is here. And as you can see, it didn't take it out. And then we have this new low. For this new low, we need inducement. Inducement can be transferred from there to this point. Simple. And before you know it, we created a new low here. we created a new low here. For this low, we need inducement. And where is the inducement here? Well, inducement is here, transfer to this point. Now, let's see whether that inducement will be taken out. Okay, inducement is not taken out. Where is your new inducement here now? Look, this is your new inducement here, this high. So we want to wait for price to come and take it out. Once price takes out this high, then we look for an OB. This will be a nice OB for us to take trade from. So, but let's continue to play price and see whether it will take it out. Okay, so it didn't take it out, and price created a new inducement. We have gone too far. Let me just take price out from this point so that we can see what we're doing. Okay, no, let me take it out from here. From where? Okay, so inducement, new low has been created. And where is your inducement for that new low now? Well, these are equal lows. So the inducement is still fine where it is. Let's continue. As you can see, inducement, a new low has been created, and therefore this inducement is now transferred from this point to this point. So once that inducement is taken out, where is your area of interest? Well, there are only two areas of interest that work within your trading range. Remember, this is still your high on the 5M. Okay? And so where is your OB here? Look at this. This candle took out this previous candle's high. Can you see that? So this will become an OB. But look at this OB now. Is it mitigated? Yes. It's already mitigated by this push up. But take a look at it properly again. This push up is not a valid pullback. Remember, these are equal highs. This is not a valid pullback. So this very OB here, this area of interest here, is still valid. It's still valid, very much valid. All right? So if we stretch it out and wait for price to come and tap into it, then we'll go long from there. Understand? We go long from, we go short from there. So let's see what happens. Okay, so price has tapped into that area of interest. So we can go short from here. Now, where is our target? Of course, our target will be where we have our 1 hour change of character. Okay, so this is our change of character here. So we can place a sell trade here, and our stop loss just above. Just give a buffer, and then our TP somewhere here. Let's determine the TP. So our TP somewhere here. Okay, that's our TP. That's a fairly good trade if it goes our way. So let's advance price. Look at the number of times price has tapped into this our area of interest. Let's see whether we are still in the trade. Okay, we are still in the trade. So price is going in our favor. But remember, you don't need to leave your trade running till this low, because the market can do anything. So you begin to take your partials along the way. Now, remember, price has taken out this structure low here. And price has closed below it. Okay, take a look at what's happening here. Price has closed below it. Has it closed below it? Yes, eventually it closed below it and now created this low. For this low to be confirmed, it needs inducement. Now, let me zoom in for you to see properly. Look at the inducement here. Simple and straightforward. Take a look at this candle's high. took out this previous candle's high. That's your inducement. Your inducement was taken out with a candle wick. Eventually, this candle wick took out this previous candle wick. So this, in actuality, is your TNCP. So you could have taken your trade right there. Look at your trade here. This candle close below it, and therefore you would have taken this advantage. Okay, look at it. You would have taken that advantage, and the next candle came and tapped into it. A pullback came and tapped into it. Okay, so now that is your second trade there. Let's frame that second trade. That's our second trade to go short from here. Simple. Where is your stop loss? Stop loss just above. Your take profit. So we target the same low and somewhere here. Okay? So that's our second trade, because price has already tapped into it. Now remember, price has taken out structure here with a candle wick, but eventually it closed below it. That's a break of structure. All right? Now, for this low to be confirmed, it needs inducement. And where is the inducement here? Where? Inducement, there is no inducement here. This high becomes your inducement. So, but let's continue to see what happens. Okay, we continue. But we are in two trades now. We're in two trades, so we continue. Now remember, for this low to be confirmed, inducement is needed. Here is your inducement. Price didn't get to that and created a new low. For this new low to be confirmed, it needs inducement. So here is your inducement in the market. Simple. So we continue. Okay, inducement is still valid where it is. Okay, so we now have a new low in place. For this new low to be confirmed, it needs inducement. And where is the inducement here? Inducement can be transferred from this point to this point here. So we continue. And then if price takes out that inducement, where is our area of interest? Well, this one, everything is mitigated here. Now, the area of interest you can look at if price takes out that inducement is this other flow here. All right, here is another flow. So if in future take out that inducement, tap into this other flow, then we can go short from there. Okay, but let's see what happens. Okay, so price has taken out that inducement. How did he take it out? With a candle wick. Can you see that? He took it out with a candle wick. It's not necessary for price to go and tap into your area of interest. Once it has grabbed liquidity here, price can start going back downward. Okay, so he took it out with a candle wick and eventually gave us a TNCP, but price didn't close below this black candle. This one didn't close below. So eventually, look at what happened here. So this is your order flow now. From this high, this is your last buying momentum before the drop. So let's continue to advance price. So we take our sell again there, and our stop loss just above. Just give a little buffer. Now you can take 50% of this area here if it's too large. Okay, so our TP still at that low. So our TP is there. So we have 3 trades now. If this one is activated, we will be in 3 trades. So we continue. Now price has tapped into it. So we are in the 3rd trade now, going in our favor. Now, until price takes out this low, we cannot do anything again. Okay, so now price has taken out that low. Okay, now has created a new low. For this low to be confirmed, inducement is needed. And where is inducement now? That's your inducement. And then where is your OB here? In case it takes out that inducement, your area of interest is here. Your order flow is already mitigated. So, but this is your OB. Okay? Valid OB. If price comes to tap into it, we go short. Let's see. Okay, we have a new inducement in place now. So we can transfer this inducement to this point. Simple. And where is our OB here? Well, our area of interest would have been this, but it's already mitigated. So this one is still okay where it is. So we continue. Okay, I want to say something here now. At this level, we are pretty much close to the 1H change of character level. And at this point, I do not advise that we add any more position to the ones we have entered already. Okay? Because we are too close to this 1H chalk level. The reason being that once price takes out this 1H chalk level, is going to give us, we are going to be waiting for a fresh inducement on the 1H before we can start plotting the market again. Okay, so at least these 3 positions have given you huge move to the downside. All right, all these positions we have entered have given you huge move to the downside. Remember, we are in 3 solid positions and our trade is running in massive profits. So we are not going to add any more position here until price takes out this 1H change of character level. Okay, so that is how to take advantage of market structure shift on the lower time frame to have multiple trade setups. I hope you will go over this video again and again and actually study everything we have done here.